So, what's the difference between tax avoidance and
Regular
tax
account
evasion?
Evasion is illegal. Don't go there. If they find you, well, to be honest, you'll get fined and you can get imprisonment sentences, all sorts of stuff. So
If you got a little example, because some people I think are unsure about where that line may be.
I mean,
So
evasion is anything that's not legal.
okay.
So, if you try and hide your income or anything like that, that's evasion.
Mm-hmm.
Avoidance is using a legal method to reduce your tax liability. So that might be some sort of structuring system or something like that. So organising your affairs in a way that can reduce your liability in a legal fashion.
Hi everybody, hope you're well. And this is Pally here from Strive Consultants. I'm really excited today to have somebody on board who's going to answer lots of your interesting tax questions that we seem to be getting on a regular basis. So I'm sitting here with Zahra from TaxPI, who's one of the founders of a tax consultancy firm based out of London. We're actually sitting in London right now, which is nice. It's actually a bit cooler than Dubai because it's the middle of summer over there right now. So it's actually quite nice to be over here and have the chance to have a conversation with yourself, Zahra. So welcome to the podcast as well.
Thank you. It's lovely to be here.
Yeah, I'm sure we got a very eager audience. I'm sure that are keen to understand several, I suppose, basic areas of how tax rules work.
Sure.
And as you know, we've been partnering up for quite a while. We've worked with each other for the last year or so, and we've referred a few clients to yourselves, and they really appreciated your sort of advice that you've been giving them as well. So, obviously with Strive Consultants, we help businesses and individuals generally establish structures and residency in Dubai. But naturally, what comes along with that are a bunch of questions about the tax status and things like this. So I think it'd be nice to pick your brain a bit.
Of course.
But
Fire away.
But I think one thing I did want to iterate to our audience is it's obviously quite a complicated space. So it's always important, I guess, to book a time and have a more detailed conversations because I suppose everyone's scenario is unique.
Yeah, everyone has a slightly different set of circumstances in terms of what work they do and what their plan for their future work is, but also what they've done in the past, because actually in the UK, they look at the last couple of years as well as the future plans.
Okay, fantastic. So before we get stuck into the topics, just tell me a little bit more about how TaxPI came together and what made you sort of launch TaxPI. Yeah.
Well, I mean, I've been an accountant and doing tax work for a number of years. And we started getting more tax advisory work. So things like this or corporate structures, sort of within the UK and also broader. So we decided to have a specialist tax area, and this is our sort of specialist tax area. And we still have the sort of UK general practice side as well, but this is the tax team.
Okay, fantastic. So without further ado, let's get stuck in, I guess. I think so. One of the areas that I want to just touch on straight away, what's the difference between an accountant and a tax advisor? Because a lot of our clients tend to go to their accountant for tax advice. But what is there like a different level of qualification, or how would you describe the difference between the two, and why is it better to go to a tax advisor, I guess?
So there are different qualifications in the UK and also abroad as well. Generally, accountants in the UK are either ACA or ACCA qualified, or sometimes CIMA if they sort of do management stuff and things like that. There is a specialist tax qualification called the CTA, which you do more studying for, and you do very specific tax-related scenarios. Accounting is, well, it depends exactly what you work in, but it's quite broad. It will start with bookkeeping to preparing accounts, and then normally an accountant will also do corporate tax returns, self-assessment, things like that. But they may not do tax planning, tax structuring, and the sort of more technical, specific side of the tax advisory service.
Sure. Okay. Fantastic. It's good to know. So kicking things off, I think a common question, and I think the rules maybe changed over the last few years, is how much time are you able to still spend in the UK and become a non-tax resident? Because I know there's all these complexities around the 90-day rule, then you have something around 183 days, and you have How much of that you're working?
They're great fun with these rules. I mean, it's a very difficult question to answer because it is totally fact specific. So generally for the average scenario, but obviously I must stress that this is a very general answer, 90 days is fine. The reason being there's automatic tests, but if you're not eligible for those automatic ones and you end up in the specific ties test, you can plan your lifestyle to mitigate some of the tests. However, there are going to be some things which you cannot plan for, effectively what you did in the last couple of years, because they look at the last 2 years. So if you spent 90 days in England for the last 2 years, any time in the last 2 tax years, you already have a tie. And so generally things like where your family live, where you do your work, what you're planning to do in the future tax year, things like that, you can structure so you can remove those as ties, but you can't always remove other things.
Okay, so when you mean automatic test, I guess there's criteria where if you meet it, you automatically become a non-UK tax resident.
There's 2 ways, actually.
2 ways.
So there's an automatically UK tax resident, there's an automatically non-resident, and then most of the rest, and the space that we're discussing is basically the specific sufficient ties, sorry.
Okay.
The sufficient tie space, which is in that middle space. So if you're automatically resident, automatically non-resident, it is.
It's straightforward.
Yeah.
Yeah.
But this is the sort of grey space where you can plan your life in order to remove you from the UK.
You touched on ties to the UK.
Yeah.
What sort of areas constitute as a tie to the UK, and how does it affect your tax status? Does it affect you, the amount of time you're able to spend in the UK, or does it just make you a taxpayer automatically? Could you just elaborate slightly more on that?
Yeah, so there are 5 main ties, as it were. So the first one is work, where you do your work. The second one is where you live. The third one is where your family is. So that's, partner, spouse, and dependent children. Then you've got where you're spending time in the year that you're in discussion of, and then you've got the previous ones. And then I guess the best way to say this, the more ties you have, the less time you can spend here.
Okay.
And then so normally with 2 ties, you can do 90 days or less. And then, as you can see from your face, 2 ties is not very many, but that is what gives the 90 days. Yeah. And then obviously if you've got more than that, because you can't restructure, obviously that shrinks further.
Sure. So let's say, for example, you've got children, say you've got 2 children, would that be one tie, or?
That's just the family tie.
That's the
family tie,
single family tie.
Yeah.
So you don't have to sort of.
It's not 5 ties for 5 children or anything like that. Usually don't go there.
I'm surprised that we get these questions. So I just wanted to clarify that with you as well. The work tie, that's an interesting one, because many of our clients and potential clients are business owners.
Yes.
And so they're not employed, or they may be on PAYE just to get their tax-free salary out the business first. Could you just explain a little bit more around what constitutes to a work tie, if possible?
Yeah, work is a funny one. Work is basically how long you spend working. So the problem with business owners, I know this one, you have your phone the whole time. You are always on that phone. So if you do 3 hours of work, and literally it's just 3, and 3 hours is not a lot. So if me and you are doing work for 3 hours today, that's a day of work. And you get, 39 basically work days a year.
So that counts as a day?
That's a day.
Okay, so 3 hours. So that could be like meeting clients.
Anything.
What we're doing right now.
Yeah, because technically this is work, right? This is marketing of sort. Of
course. And does it matter who you're working for? What if the company's based in, say, Dubai, and you're over here?
It doesn't matter. That's the problem. Work is work.
Interesting. They're
the sneaky ones.
Yeah, that's the sneaky one. So it doesn't matter if you're a director, it doesn't matter if you're an employee or just a shareholder. If you're doing some level of work on behalf of your business or anyone else, I suppose, then
any work. Yeah, unfortunately.
So what's the number of days of allowance? I suppose if you're coming here for, say, you're using up most of your 90 days. How many of those days can you work before potentially falling?
Is 39.
39 days of the 90.
Well, 39 days in the tax year.
In the tax year. Ah, okay. So
and they don't have to be in one go, or they could be spread out. All of that doesn't matter. It's just.
Got it. Okay. Sure. Interesting. Okay. Fine.
Every single tie has a different number of days. What ticks off the tie? It's not logical. Unfortunately, we just have to follow it.
Excellent. I did read somewhere. I don't know if I got the wrong end of this, but once you've been outside of the UK for 3 tax years, financial years, Does that 90-day allocation bump up to 183 days?
It does change, but again, it depends what else is going on. So what happens is the country tie effectively, which is where you spend the most time in any given year, that tie falls away, and then the other rules are a bit more lenient. But that becomes again very fact specific, what you do sort of from year 4 or 5.
Sure. So is it fair to say if you are outside of the UK for 3 financial years, then things become a little bit more flexible with the UK as well? So you can maybe spend a bit more time there, and
you need to still pay attention to it.
Yeah, of course.
I wouldn't say, okay, life's good now. It's not good now. You still need a couple more years before you get to that point.
Yeah.
But yeah, you have more flexibility in what you do. Yeah.
Sure, because obviously Dubai is quite a transient place, so people may not always stay there, for until retirement.
Yeah, of course.
So who knows? So it's good for people to be aware that there's other options around. But I guess there's a lot of detail here, hence why it's always good to talk to an expert about your individual scenario. Okay, great. And then residential ties. That doesn't include investment property or anything you put on buy to lets. It's very much down to if you have a home, I think.
It's slightly more than if you have a home, because it's also if you have access to a home, as it were. So if you had family who give you access to their home, that's also technically part of the accommodation type. But no, if you have a rental property and you don't enter it, that's entirely separate, and that's business. But home as a tie is either if it's your house or your home and you live there, or if you have family that give you access to the family home as well.
Okay. And so that's basically so if most of our clients, let's say for example, they have their own home and then they rent it out before we're moving out, would that remove the tie?
If they don't stay there when they come back, then generally it's fine.
Okay, generally that's okay. Okay, interesting. See, everybody, it's not quite as easy as it sounds sometimes. So it's really a
lot of nitty-gritty points.
Yeah, it's important to do your due diligence on this stuff. No, fantastic. No, I appreciate that. Okay, so I'm going to move on to, I think that's sort of covering off the residency piece, I suppose. But I want to talk about some simple basics because, I think for me and you, we're quite accustomed to, this sort of stuff. But, some of the questions we get asked are, do I still get my tax-free allowance from any UK income that I have to pay tax on? So I don't know if
you're a British citizen, yes, you do.
Okay.
So if you are still, if you've got a British passport, then yes, you do.
Okay, fine. Fantastic. And a lot of our clients have investment property. I know taxation on property is treated slightly differently, and I suppose the previous question was slightly loaded. So can you just break people's hearts with regards to property tax?
Property is taxed where the property is in this country. So if your property is in the UK, you still get property tax in the UK, and that doesn't matter if it's held personally or held by a corporate. Obviously, it's the appropriate tax regime. So if you hold it personally, it's the self-assessment regime. If it's held in a corporate, it's the corporate tax regime.
Okay.
But unfortunately, yes.
And does the same rule apply to commercial and residential property?
What do you mean by that?
So if someone's, say, renting out an office space at their own or warehouse, they would still have to pay tax on the earnings in line with either corporation tax.
So it's based on whoever holds the property. If the company holds the property, the corporate pays. If the person individually holds it, the individual pays.
And what about when you liquidate or sell the property? Is the CGT and capital gains tax still have to do with
property is UK, unfortunately.
So anything, so you can't get away with that.
Nothing to do with property. Even VAT rules, if they're related to services related to that property. I mean, most of these cases won't be VAT related, but even things like VAT come in.
Absolutely, sure. Okay, no, that's good. I think important information for everyone.
It's a disappointment for most people to hear this. Nobody really wants to hear this.
Yeah, because I suppose it's natural for people to, when they save some money to invest in real estate, for a bit of wealth creation and long-term wealth creation. So I think that's why many of our clients
and they have a holding, right?
Yeah, they have something.
They need to make a plan.
That's right, exactly. Fantastic. Good to know. So what's the difference between tax avoidance tax evasion?
Evasion is illegal. Don't go there. If they find you, to be honest, you'll get fined and you can get imprisonment sentences, all sorts of stuff. So
have you got a little example? Because some people I think are unsure about where that line may be.
Evasion is anything that's not legal.
Okay.
So, if you try and hide your income or anything like that, that's evasion.
Hmm.
Avoidance is using a legal method to reduce your tax liability. So that might be some sort of structuring system or something like that. So organizing your affairs in a way that can reduce your liability in a legal fashion.
Yeah. And I suppose this is why I think, your
That's why
advice is
accountants
worth
have
it.
jobs.
Yeah, and tax advisors, because I think some clients, some individuals take this too lightly. And I don't think they realize when they may be crossing a line,
Yeah.
because they might be taking it a bit too lightly.
Too gently.
Yeah, too gently. So it's probably this is why it's really important to talk to an expert and get that advice locked in, I think, as well, to make sure you're not inadvertently falling into something
that will then get you in trouble later.
Yeah, no, absolutely. No, it's very interesting, very interesting. So I'm going to get into some specific sort of business models as well that clients tend to want to operate as well. So I'm going to start off with the sort of social media, online influencer, marketing agency type of business where, let's say, for example, they've established a company in the UAE, a place like the UAE, and they have clients based in the UK, or they have clients based in other countries. Those clients are paying for the services to the Dubai company.
Yeah.
Is there any UK tax on anything like that?
It kind of depends where they're providing it. So in the UK side of it, it's not just where the company is registered, it's where the work is actually being done.
Okay.
So say your influencer has registered their company in Dubai, but is actually coming to the UK and taking all their pictures and doing their work in the UK, they probably be creating a permanent establishment in the UK, and then they will fall into the UK tax regime. So just because you've moved and you've registered over there, if you are still basically doing everything here, you will end up under the UK.
Sure. So it's where the work is taking place, and then you need to think about establishing yourself there, or registering the foreign entity
where you need to be.
So many of our clients tend to be business owners that are moving across from places like the UK, maybe Australia or South Africa, different parts of Europe. But let's just focus on the UK for now. Many of them are wondering if they still have to pay tax, income tax specifically, if they move to Dubai and they still work on behalf of their UK business. Are they able to draw a salary out of the UK business? And if so, is that taxable in terms of in line with the UK bans and system, or not? I don't know if you can shed some light on that particular topic.
So if they are an office holder, so a director or something like that, if they take a salary, that will be under the UK regime. So if they take under 12k and they have nothing else in the UK, then they get their personal allowance. But any more than that, then they start hitting the higher levels. But if they take a dividend and they're officially non-resident, that dividend is not taxable at that point in the UK, unless there's something called clawback if they come back early, basically, at which point that then would come under there.
Okay, so if you're, say, a shareholder, director shareholder, most of our clients tend to be like sole owners of businesses as well. If they declare a dividend in the UK, obviously the company's paid its corporation tax by that point, but that dividend won't incur any UK income tax
unless they come
back quite soon after leaving, which is fair enough as well. But if they're an officer of the company and they take a salary, that is subject to UK income tax.
So if they take a salary, it's still
So so people should think about whether they
should plan, or it depends obviously what they've done in the past, because if they're established businesses, they may have had a sort of salary dividend structure anyway, where they take at the minimum and then their dividend. But they should definitely consider that.
Okay, no, I think that's very useful to know that as well. So in terms of, I know I'm trying to keep this as light touch as possible, but it's difficult not to get dragged down into the rabbit hole. So this is like really going into the rabbit hole here. I just want to skim VAT, just want to skim it.
A big fat book.
and somebody told me you're a little bit of a VAT specialist. Just a couple of very simple things. So I suppose let's go to the analogy of someone selling training courses online. A customer from the UK comes along.
Training courses is great fun.
Wants to buy an online training course from a Dubai training academy or service or individual. where
This
does
is
that come into play?
complex because it depends how the training is done. Is it pre-recorded? Is it a download? Is it live? All these things
Let
unfortunately
let
impact the
let's go with
VAT.
pre-recorded just to kick things off. And I know I'm pushing you here.
You might be pushing me a little bit. I think I'm going to say I need to give specific advice on that one.
Okay,
This
guys.
is quite
So
it's
the
quite
point is,
technical.
I suppose this whole area is
Yeah.
it covered by sort of distance selling rules? Is
Yeah,
that
there
what it
are
falls
special
under? Yeah.
digital services rules.
Okay.
And these are complex because obviously it depends if your customers are individuals, VAT registered companies, and actually how the media itself works, and where
Right.
you are, where they are, and all these other things. And it's the interlinking of all the different parts which gives the answer.
Mm,
So this part of that is, it's like running your residency test whole questionnaire. It's like
mm.
your VAT questionnaire.
Yeah. Yeah.
So
Interesting. Okay. And so okay, okay, let's one of the things I want to cover on is how does somebody manage their tax affairs over the course of a year? I mean,
okay,
should they, it's great. I can meet Zara. I can get her to
here's the
write,
plan.
here's a
Yeah.
plan. What model do you see working best? How often should they check in? And let's say they make a mistake. Is the HMRC fairly lenient on letting you reverse those things, or what's your experience around on that
Yeah.
area? Yeah.
I mean, I would always say if you want to change the plan in any way, check in before you change it. You'd be surprised how many people change the plan and then come retrospectively and you're like, you've changed this quite materially. Actually, this has an impact.
Mm,
Um, but the key thing is document everything. So, keep your flight records. I know, it sounds mad, but keep your flight records. If you come here, keep records of where you stay. Be it, you might stay in with a friend or whatever, but
yeah.
keep some sort of record. You might stay at a hotel. Keep that piece of paper.
Right.
Because at the end of the day, if HMRC do come knocking, you just have to provide them the evidence. And so long as you've got the plan and the plan is okay, and you have the evidence to show that you actually action the plan as per the plan, then it's fine.
Mm.
If you don't necessarily action it quite as, it depends to what extent you have gone. And then obviously at
Yeah.
that point, it depends what next.
Absolutely. Interesting. Okay, so now I'm going to look at it from the other way around slightly.
Okay.
Okay. So companies want to expand in the Middle East. It's a growing market. The population's expanding. There's huge modernization projects going on across the UAE, Saudi Arabia, Qatar, and places like this, even Oman.
Markets, yeah.
Growing markets. And let's say we have a business which genuinely is trying to expand over there, and they've got operational substance.
Yeah.
Where would they? But let's say the directors are still remaining and spending most of their time in the UK. So management control, let's say, is
Still-
clearly in the UK. Where would the corporation tax
It's
need to be paid?
It's still in the UK, unless there's some sort of nitty-gritty thing. So, for example, if you were thinking about it the other way, UK real estate always in the UK. So, if there's anything very nitty-gritty specific to that particular region, depending on which region you choose. But even then, there are double tax treaties to cover that. So, you don't pay your tax on the same thing twice. The
Okay.
double tax treaties, and the majority of countries will have a double tax treaty in place.
Yeah.
Will cover that and prevent that.
So if corporation tax has been paid in the UAE, then
Well, you have to pay in the right jurisdiction.
oh yes, sure.
So provided
Okay.
you've paid in the correct jurisdiction, and then at that point it depends, whose is higher, who is lower, and then how much you may or may not owe in the other direction.
Okay, so you may there may be a net amount
There might
that
be a
you
net.
pay
It really
in the other
depends,
direction as
exactly.
well. So very much where the management is located,
key.
even if say you had a 100-person company in the UAE, manufacturing
manufacturing-
widgets, yeah,
Yeah, all your operations are over there, but your boss is over here. So yeah.
and that is enough.
It's central management and control.
So that is really the
It is a
key
very
thing that you
British
need to.
concept.
So I think for a lot of our clients, that's probably the start point is to see.
Look at themselves and their key, because you're not gonna. You might be very able to run an entire company yourself, but a lot of people, once they get to a certain size, they need a whole management team, right?
Yeah,
And
absolutely.
it's where that team
Okay.
is based.
So just sticking on management control a little bit further, in regards to, you got shareholders in a business and you have like a board of directors or a director in the company. If, say, for example, a shareholder appoints a director,
Yeah.
does the HMRC look at where the shareholder resides and uses that as a way of gauging where management control may
No,
be.
because the
Yeah.
shareholders, obviously, they are responsible for who the directors are, and that's sort of the line of their role. The directors are responsible for the daily running, the management, and how everything operates. They have the giant list of responsibilities,
Sure.
not necessarily the shareholders. So central management control is at the director level and where the board
Okay.
meetings are and how that is run. Shareholders, they might appoint the director, but they have nothing to do with what the director does every day. They're fairly removed.
Okay, fine. But I guess it's, this is where it's probably good to definitely have a session with yourselves.
It's worth having just to, because everyone, you might think you're not doing any work, but really you own it and you actually are doing work, and you think, oh, well, this is easy, but it counts as management.
Yeah.
And so it's to see and get down to the fine print of what you're actually doing, and then you can assess, okay, would this be called management? Would this not? And then be able to document it in a way that could support the position.
Sure. So I suppose I'm seeing in my mind, I'm visualizing like a mapping almost of,
If you
responsibilities, your position in the company, who else is involved in the business. And I suppose that's what you guys specialize in, is trying to give people a plan on how to, I suppose, where best to hold your board meeting, I guess, and things like this. And
it's about, what you have, who your team are, what you need to achieve, and then what the best plan is to fit that. And we can sort of, go this way or that way based on what your requirements are.
Sure. Okay. Fantastic. Good to know. Good to know. So everybody, it's very important to, talk to you. Make a plan. For
and
sure.
Document the plan.
Fantastic. So, okay, great. And let's say people want to move back, say, after 5-6 years to the UK. Do they have to worry about any clawbacks from HMRC in any areas?
Be careful on exactly when you come back. So there is a clawback rule.
Okay.
It applies to dividends and capital gains, because obviously if you were taking salary and it was here, then that was already covered while you were here. But the dividends and the capital gains while you were away, they would be exempt from the UK. But if you come back too early, they can claw back.
Do you know approximately what that
Generally,
time scale
it's
looks like? 5 tax years.
Obviously, depends
Sure.
exactly what you
And I suppose they put that rule in place so people don't just go out for 1 year and
take all the money, sell the
Take all the-
company, take all the money, no tax, and then come back.
the following year, which I guess is fair as well. And if you did say come back in year 4, would they try to do a clawback for the entire period you were away?
Yeah.
Okay. Wow. Okay. So that's very important for people.
It's very important to get those dates right.
Yeah. So
definitely document and check everything before you.
and this applies to UK dividends, not
and
other
capital
foreign
gains.
dividends, I guess.
That would be based on whatever the foreign jurisdiction is.
And the sale of UK assets, which were
So say you sold your UK company while you were abroad, or something like that. If you sold something like UK property, that's always subject to UK capital gains, because property is location specific. But if you sold your business while you're there,
or like stocks and shares that you were holding or something like that you held before you, I suppose, went out, and things like this as well. Okay, interesting, good. Okay, great. I think we've pretty much covered all. It feels as though this is like there's so much more. And we could keep peeling the onion, keep
it's all
peeling about the layers.
and pulling this bit and that bit, and then coming around and making.
Yeah, and I think that was the point of I think that's the point of having this sort of podcast and having this conversation with yourself, is just to make sure people understand that this area is important to focus on and spend time on planning.
Yes, planning is essential.
Because sometimes you can just simplify it. You just think, hey, I could just leave the country and I'll be free, from paying any taxes and things like that. But obviously, it's not the case.
Timing is important. How you do things, what you plan you make, all of that really does matter.
Yeah, no, absolutely. So, I mean, just to wrap up a bit further, so what can a client expect when they contact TaxPI? How do you take them through the process from the initial, I suppose, call and conversation, and how can you support clients?
So the initial call is just a bit about getting to know each other, who they are, who we are, and do we think that there is something that can be done? I mean, most of the time there is, unless someone just comes with a property portfolio, in which case it's a bit tricky. And then after that, if they're happy to make a plan and work together, then we'll have more detailed conversations about literally the nitty-gritty of what they've done in the past, what they intend to do, how they can do it, and then we can have a look at that and say, okay, based on this is what will or will not work. But if you make the following adjustments, because normally with a few tiny tweaks to what the plan is, which most people are happy to accommodate for the what happens with the benefits, then they accommodate it, and then they can go from there.
Yeah. And I suppose they say the devil's in the detail. It definitely
Absolutely.
applies here.
This is all about the detail.
Yeah.
This one.
Well, I suppose from a positive perspective, you could also be sitting on some really great opportunities to save as well, I
Yeah,
guess, and that
yeah.
you may not be aware of. So I suppose it works both ways. It's about risk management and protecting yourself, but also about uncovering the opportunities that you've made.
If you go abroad, yeah.
Yeah, that you maybe weren't sure of that were available to you as well. So, yeah, no, very.
I mean, we have some
interesting.
people who, they want to move and they want to move now. And then there are people who are like, okay, maybe, in a couple of years, this is something I'm looking into. I need to grow here or do this first. Or, my kids are still at school. I want to keep them at school. And then, that sort of thing.
Yeah.
And then after that, they want the plan for that. And then, if you even got a longer time frame, you can plan a whole bunch of stuff as well.
Got it. Fantastic. Wow. Yeah, no, thank you, Zahra. I think this has been very, very insightful.
It's been fun.
I have a feeling we might be doing a few more of these in some specific areas. Even for me, I mean, it's been enlightening, here listening to this stuff as well. I mean, we do need to make it clear this isn't official financial advice.
Everything is on specific situations
Yeah.
in this department.
Yeah, no, this is just obviously we're just having a general
Yeah.
conversation as well. So we don't want anyone going away and making decisions off the back of what they've heard
it's specific.
on this.
Devil is in the detail.
But yeah, no, fantastic. Really appreciate you taking the time out. I know you guys are really busy at the moment.
You must be busy too.
Yeah, I mean, there's a lot of people that want to sort of diversify and devise
It's taking off, isn't
it's
it?
taking off, and it's done well at branding itself, and it's been making it easier for foreign investment and overseas individuals to set up and move across and do commerce in Dubai as well. So that's why we're big advocates of the place as well. But no, really, really insightful conversation. Thank you so much.
Thank you.
I'm sure our viewers are going to absolutely love this.
Excellent.
And yeah, we'll love to get you back on at some point in the future.
Excellent.
Thanks, Zahra.
you.
Thank you.